please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Weakness continues on the Lal Street. Market extends losses in afternoon trade, dragged by banks, technology and infrastructure stocks.
PSU banks trade weak after the 10-year benchmark bond yield hits the 7% mark. This is the highest level since September 2016.
Earnings today. Eicher Motors seen posting a strong quarter, revenue growth to be driven by price hikes, and all eyes will be on Bank of Baroda's asset quality as it reports numbers today.
Sun Pharma trades lower ahead of earnings today. Analysts expect the profits to rise 64%, but the US business is seen under pressure. Additionally, CNBC Tv18 also learns that the US FDA has begun a surprise inspection of its Baska facility in Gujarat.
And October WPI inflation surges to 3.59%, the highest level since April 2017. Food inflation spikes to 3.23%. Fuel and power also rises sequentially. Hello and welcome to Business Lunch. I'm Nisha Poddar, and with me as usual is Mangalam Malu. Mangalam, good afternoon. There's weakness all across the board. In fact, the key indices in the red. Take a look at Nifty 50 below the 10,200 levels. As far as Sensex is concerned, that's also in the red and below the 33,000 levels as well. So all the key levels being breached. Mid-cap as well as Bank Nifty also down, but mid-cap slightly better than Bank Nifty and the banking space. Advanced decline ratio shows that it is towards the weaker side, but there is a little bit of tapering in the last few minutes of trade, giving some hope of a stronger second half. But the two stocks on my radar are Bharti Infratel as well as Bharti Airtel. Take a look at Bharti Infratel, down 4% in trade today after large transactions really hit the market today in huge block deals on the bourses. So 4.6% stake that has been sold by Bharti Airtel, the promoter of Bharti Infratel, for 3,325 crore rupees, which is at a price of 400 rupees per share. Now, remember that 12,000 crore rupees worth of these shares have been sold by Bharti Airtel, the promoter, in its tower business in the last few months, since March this year. Two important things about this. First, this could have been the requirement of the large transaction at Bharti Infratel. And the second, these levels of Bharti Infratel probably makes that transaction more conducive. Over to you, Mangalam.
Absolutely. So we'll keep an eye out on all of those details out there. But as far as our markets are concerned, yet another muted session for the Nifty, down about 260 points in the last 8 sessions. But in the larger scheme of things, down about just about 1.5–2% from the 52-week high, which is the record high. And why has that happened? Well, because if you take a look at the frontline indices, the heavyweights, index heavyweights would be the likes of Reliance, ITC and HDFC. All of them down, 3 to 7% from the top in the last month itself. Another couple of losers, we also have the likes of Lupin and Bharti Infratel, all of them losing in trade. If you take a look at the OMC pack, that one too saw a bit of a rally. All these three are a part of a Nifty. Now this month itself down anywhere between 7 to 10%. But what is the interesting part is that the Nifty, while it is below the 20-day moving average, it is holding above the 50-day moving average. So that is one port of call that we'll keep an eye out on. And secondly, if you take a look at the Nifty futures plate, that one should come up for you. Out there, the premium hasn't declined as much. In fact, yesterday, the Nifty futures premium was close to around 44 points, and right now it's trading at 47 points. Another part, while we're below the 10,200 mark, the Nifty put writers, they're not running for cover yet, and the 10,200 put still has the maximum open interest. So let's see whether we can recover above those 10,200 levels or not in the very near future. And the 10,300 call, though, that one's continuing to see some bit of writing. So if we do recover and go above that 10,300 mark, we can see a case of short covering at that level.
As far as Dilip Buildcon Q2 numbers are concerned, EBITDA margins an 18% versus 17% on a YOY basis, 100 basis points up on a year ago, comparison. Net profit at 115.6 crore rupees. As far as revenues are concerned, at 72.6% higher at 1,582 crore rupees, a substantial rise on a YOY basis. EBITDA 83.5% at 285.3 crore rupees. And the street is really liking that particular number because the stock has seen a huge spike far as the numbers are concerned. They're looking good, over 1% jump in that particular stock as soon as the numbers are announced, versus 7 crores of profit on a YOY basis. So this particular quarter is supposed to be a seasonally weak quarter, but still the numbers are looking good, over 100 crore rupees of net profit, and that's something that has gone down well with this particular companies and the shareholders, and that's why the stock has really jumped. Of course, we'll speak to the management about what really transpired and where has this kind of a performance really come in from. So we'll wait for that, and it is paring down some bit of gains at this moment, but the stock is slightly volatile on the back of those numbers. Markets really digesting the 18% EBITDA margins on that particular counter. We'll take a look at the global market action as well at this point. In the Asian markets, they were mostly under pressure as the investors really digested the release of a slew of Chinese economic data points, and that came in below the forecasts. China's market slipped after the country's economic expansion really dialed back a notch as factory output, investment, as well as the retail sales all decelerated. Meanwhile, the Nikkei also erased early losses to climb 0.42% as gains in most of the tech names offset losses in energy-related stocks there. So that's the picture of the Asian markets. The European markets are expected to open lower today, dragged down by the negative sentiment in China and the US, also in the UK. And the Parliament will really discuss Theresa May's EU withdrawal as well bill today. And as investors continue to really monitor the developments on US tax reform discussions, attention really turns to the appearances coming in from Mario Draghi, Janet Yellen, Mark Carney, as well as Haruhiko Kuroda at a European Central Bank conference today. So lots of areas to look at, but Ipca Labs numbers are also here, and the stock is spiking up more than 2.5% up as we speak. EBITDA up 10.2% at 149 crore rupees. EBITDA margin at 17.2% versus 15.3%. So there's a fair bit of spike there, and net profit at 96.5 crore rupees versus 55 crore rupees. Mangalam, you have more to add as far as Ipca Labs is concerned. 3.5% jump on that particular counter.
Well, that's as far as the revenue is concerned. Maybe we'll have to adjust the revenue for excise duty. Looking at the EBITDA to 10% growth, as you pointed out, a strong growth on the bottom line. But what I like the most about Ipca Labs numbers, if you take a look at the balance sheet out there, the borrowings, they've come down. The long-term borrowings, they've come down from about 351 crore rupees to about 263 crore rupees. So that's a 90 crore rupee pairing of the debt as far as their balance sheet is concerned. Cleaner balance sheet on the long-term basis. Short-term working capital debts, of course, have doubled to about 340 crores versus 170 crores. So some bit of strengthening seen on the balance sheet as far as the long-term debt is concerned, and the net profit growth is something that the street is liking. Deep Industries numbers too falling on your screen right now, or rather appearing on your screen, a net profit growth of 5.5%. We'll try and get more details on that right now, but Ipca Labs holding up at the high point of the day. But let's move on to some macro cues then. Annual wholesale price inflation, which is WPI as we know it, picked up in October to a 6-month high. Remember it being in the negative terrain for a fair bit. It's been driven by faster rises in the prices of food and fuel products. WPI inflation, remember, came in at about 3.6 in the month of October 2017. This is higher compared to 2.6 that came in September 2017. Food articles, that inflation rose to about 3.23%. versus 1.99%. Remember, we got the CPI number yesterday too, and the vegetable inflation really was the one which was higher in September, while fuel and power inflation surged to about 10.5% owing to the spike that we saw in the crude. And because of which, we've also seen some bit of movement in the yield. The 10-year government bond yields, they've hit a 14-month high. What does this basically mean for PSU banks? Remember, yields and prices have an inverse relationship. Abhishek Kotari joins us with more details. Abhishek, higher yields means more losses for PSU banks?
Exactly, Manglam. What it impacts is the total tradable portfolio.
Right.
So in the investment book, you have two categories. One is available for sale and another one is held for trading. So bond yields have increased by 34 basis points in the current quarter, or as we speak about 39 basis points. So this has moved from 6.66 to 7.04. This moves 34 basis point can impact the available for sale and held for trading portfolio. The highest impact will be for PNB. Now PNB has about 84,800 crore of tradable portfolio in their investment category, while the lowest impact is seen on Bank of Baroda. Why is the impact higher for PNB and why is the impact lower for Bank of Baroda is the duration of the portfolio. The duration of PNB is close to 4.5 years, while the duration for Bank of Baroda is close to 3.2. The highest duration is for Canara Bank at 5.1 years. So based on that, if you look at the Q2 FY18 operating profits, the impact is largely on PNB, wherein it impacts their operating profit by 40% because they will have to make provision if the yields remain at this level till 31st December. Further increase will further dent their profit growth in the coming quarters. So for Canara Bank, Bank of India and Indian Bank, it is anywhere between 30 to 32%, while for Bank of Baroda, it is less than 20% of their operating profit.
All right, Abhishek, we'll keep an eye out on that, but let's watch out for Tata Global Beverages numbers. I saw the net profit come by at 123.5 crores. This compares with a poll that we had, a Deutsche Bank estimates rather, not a poll, of around 146 crores. Looks optically lower than that, but we need to take a look at the growth as well, because the base number has changed from about 139 crores we were working with, or rather, wait, the net profit, actually, the group consolidated profit has actually come in at 154 crore rupees, which is higher than the 146 crore estimate that Deutsche Bank had. So 139.6 compares to 154.4. On the net profit after tax, the company's posted 123 crores. That is a growth of 14.2%, but the group consolidated profit has come in at 154, which is higher than the Deutsche Bank estimates that we had. At the same time, if we're taking a look at the revenue from operations, 1,692 crore rupees, that compares to about 1,621 crore rupees, which is a growth of about 3.5–4% on the top line. No real worries out there. The net profit is a positive. Trying to get a handle on the EBITDA as well. If you take a look at the EBITDA, that one's come in closer to around that 220 crore mark, which means a margin of 12.6%. We were working with 12%, so on the margins front as well, the company has been positive. Trying to take a look at the segments too, but we'll wait for more details coming in, especially on the other segments. Remember, the coffee segment for the company has been accounted for in Tata Coffee's numbers itself. Well, in the segments too, there's no real big movement that has taken place. 1,208 crore in the tea segment, which compares to about 1,166 crores. The EBIT out there is 166 crores, which compares to 157 crores. In the coffee business, the revenue has come to 290 crores, which compares to 260 crores. And the EBIT out there is coming at 51 crores versus 43 crores. So the EBIT margins in the coffee segment have improved a little more, but no real improvement seen in terms of the numbers. But again, that is something that the street has expected. The company is doing a lot of changes for the longer term, and that perhaps may take a bit more than just 1 or 2 quarters to reflect.
That's right, Manglam. And while the stock has already had a good bull run, today it's down about 2% after the announcement of the results. So that is the synopsis of the results there. And one stock, Dilip Biltcon, the numbers just came in some time back and it was up 1%, but it has really gone down very sharply. So there is something that the management really needs to clarify, though the profit figures.
We have Dena Bank's management with us. Their net loss, remember, widened to 185 crores in the second quarter. Ashwini Kumar, the chairman and managing director of the bank, now joins in on the show to discuss their second quarter earnings. Thanks a lot for joining in, sir. First up, 185 crore net loss in this quarter. If you take a look at the last 8 quarters itself, the cumulative losses that you've posted is close to around 2171 crore rupees itself. What were the slippages like in this quarter? How do they compare with the previous quarter and the relevant quarter of the previous year?
My first thing about, you said about losses which have gone up. Yes, it has widened from from June to September. it's about 185, but we have signed an MOU with Government of India, and if we go by the MOU, most of the figures we are online, and the losses are on account of heavy provisioning which we have to make on account of aging. Otherwise, if we compare operating profit, it has gone up substantially from June. June it was 288, it is 397 in this quarter. NPA slippages we have been able to contain. Net NPAs have grown up by about 200 odd crores during this quarter. And in terms of gross and net, the NPAs have come down. And gross NPAs have come down by about 14-15 basis points. And net NPAs have come down by about 60 points. So and the NPA front also, we have been able to reduce NPAs substantially.
So, Mr. Kumar, what is the fresh slippage number that you have for this quarter? In Q1, you had posted about 950 crore rupees, and you had also guided that Q2 will be lower than the Q1's fresh slippages number. So, if you can tell us the fresh slippage number and which are the accounts on account of which these slippages have really come in?
Slippages during this quarter is 875, so it is it is less than last quarter and much less than what was in September corresponding. It was about 1700 odd crores. In terms of account, there's one large account which has slipped. It's outstanding about more than 200 crores. The rest, all accounts are below 50 crores. So we have been able to contain the slippages. As I'm telling you, net slippages have been only about 207 crores in this quarter. Recovery has been good compared to previous quarters. All
right, that's as far as your balance sheet is concerned, Mr. Kumar. But if we take a look at your income statement itself, your advances, they've come down about 4.6% year on year, 5.3% quarter on quarter. The loan book, that one's not growing. It's in fact declining at a rapid rate. What's the outlook on loan growth going forward? When can we see this decline stemming, and when can we see it improving going forward?
We are trying to rebalance our loan book. We had a high corporate book which we are trying to shed and replace by retail. So if you go more granular, you will find corporate book coming out. Retail has shown a growth of about 11% year on year. So our thrust is on more on retail. And our CET1 for September, if you would have seen, core equity is 6.86. So we could not grow very aggressively during this quarter. Right. But the thrust is of rebalancing the portfolio, rebalancing our sectors. So therefore, you are seeing a fall in the credit growth.
Mr. Kumar, just a few more questions on your asset quality for the future quarters of this financial year. So you have some requirements in terms of provisioning, especially on account of that you have out of the 12 under IBC. So how much of that is left for the next few quarters? Will your provisions continue to rise? And also a word on your recoveries, because they were low on account of farmers' loan waiver in the last quarter. You said that it's better this time on account of what? So if you could throw more light on provisioning as well as the recovery picture.
Yeah, regarding provisioning for these 12 accounts which are with NCLT, we have a requirement about 270 crores, which amounts to about 90 crores per quarter. So for December and the next quarter, March, we would require additional provision of about 90 crores. And of the remaining, subsequent list, we have 12 accounts for which we would require provisioning. So maybe for December quarter and January quarter, the provision may go up because of the fresh accounts being added.
All right, sir. Now, finally, if you could tell us
where 50% provision is required. Yeah.
Right. So finally, if you could tell us, the government came out with that bank recapitalization plan of close to 2.11 lakh crore rupees. How much as a bank would you require in terms of capital? If you could break it down in terms of loan loss capital as well as growth capital, if you could give us those numbers.
Oh no, this capitalization plan is for 2 years. So we have worked out and submitted our requirement to government both for risk and growth capital. These numbers we are fine-tuning because as you would be aware that the government has said that the banks have to formulate their strategy going forward, how they want to grow. which sectors they want to grow, which areas would be their niche areas. So we are working on that. So once we work on that, once we go to the board, then only we'll be able to give you the exact numbers.
All right, Mr. Kumar, thanks so much for joining us. Of course, that stock has recovered from the low point of the day on account of slippages being lower than the Q1. So 875 crore rupees. As far as market has recovered on the whole, 33,000 is what Sensex has already touched. Reliance has recovered 1.5%. In fact, Reliance was lending most amount of support in terms of contribution, and that has gone up. You have more to add, Manglam?
Absolutely. So the Nifty has moved above that 10,200 mark, and we have Reliance, which has moved to the high point of the day. Not just that, we have Tata Motors too, which has moved to the high point of the day. And from the NBFC space, Bajaj Finance, that one too has spiked and moved to the high point of the day. We'll keep an eye out on how the markets are faring right now. As of now, we are above that 10,200 mark for the Nifty, and Reliance leading most of that pack. With that, we'll slip into a short break, come back, we'll speak about individual stocks and the markets. Stay with us.
Markets recovering pretty swiftly at this point. Sensex above the crucial 33,000 levels. Nifty 50 above the 10,200 levels. In fact, flattish on Sensex, only 0.07% down as we speak. Mid caps are also recovering fast, and Bank Nifty is at 25,319 points. A contribution, take a look at that. Reliance adding maximum support at high point of the day. Axis Bank also revving up, and in terms of sectoral play, it's the autos as well as oil and gas which are lending a huge amount of support to the overall markets. Now, CLSA's India Forum 2017 is underway, remember, and on the sidelines we caught up with their equity strategist Chris Wood, who is placing a big bet on the public sector banks.
If I'm running an Indian portfolio, not an Asian portfolio, I definitely would have added public sector banks, but I'm only looking at 25 stocks in all of Asia. But it was annoying because after my last visit to India 6 months ago, after meetings in Delhi, I got the sense that something was going to be happening on the public sector banks. So that's why I put SBI in. Then I took it out because I was getting fed up of waiting. In fact, the people were beginning to give up hope on anything ever happening. The Indian stock market undoubtedly looks expensive in aggregate. Foreign investors have not been bullish in India this year. I remember meeting fund managers in January in London. If you talked a bullish overweight story in India, you got a lot of negative feedback because of the valuations, because of the lack of earnings growth. And clearly the lack of earnings growth has partly been related to the lack of an investment pickup and the asset quality problems in the banking system. So to me, now, if we hadn't had the announcement on the bank recap, I think the Indian market would be very vulnerable.
All right, Tata Global Beverages has recovered swiftly from the low point of the day, virtually to the high point of the day after its results. We're getting some press release coming in where the management says that they have completed the restructuring of their Russia operations in November. Maybe effect of that could be seen in the next few quarters. With that, we've run out of time on Business Lunch. Stay tuned to CNBC TV18.